MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
Do you think the U.S. equity markets are just in a downright big bubble?
Yes, definitely. Not only do I think that it is still a bubble, it's been a bubble, and the more it stretches, the bigger the bubble it becomes. And I think we're to the point now that it is the mother of all bubbles. We've talked about that for the last few years, and if you think back, I've made several cases and examples, and just in our common conversation, and even before the election, I've mentioned this, that Trump talked about it being a bubble then, and he said if interest rates started to rise, that it would be a problem for the market, and interest rates have started to rise. He has since owned this bubble, which I don't think was very smart personally. It may be now, make political hay of it while you can, but in the end, I think that was a tragic mistake. But he told the truth there about the bubble. And then, looking at, I've talked about, from some of this, the way the cycles have been stretched in the statistical norms, that it was a bubble. And then I've quoted, kind of indirectly, or mentioned, I guess is a better word, some of John Hussman's valuation models, and actually got an email one time, somebody said John Hussman was a fool. No, John Hussman is not a fool. John Hussman sees this for what it is. He has some very sound valuation models, and the fact that his valuation models have been pushed to such extreme, it shows just how excessive this environment is, how extreme the bubble is. And now this month, with the close in January, and I'll be talking about this in my letter, I have additional technical indicators that show that this is, when I say the mother of all bubbles, I mean literally the mother of all bubbles. I have stock market data, of course, with the Dow Jones Industrial Average going back to 1896. And then prior to that, I have data that Bob Proctor gave me a long time ago that approximates the Dow Jones Industrial Average. It's just stock data going back to 1800. And I now have technical readings that this is the most overbought market since 1800. It's the biggest bubble in U.S. market history, and it continues to stretch. Are we done yet? No, I don't think so. If you back up to 2000 let's back up to 2015. We got, finally the DNA markets fell in place with that extended 4-year cycle that continued to stretch and stretch and stretch. And then we got that little weak, decline into August of 15 on the industrials. And then I think it was January of 16, January or maybe February, depending on exactly which average you're looking at. Most everything else bottomed into what was actually one of the mildest 4-year cycle declines in history. And then from there in 2016, it took the market forever. It just chopped, and it took it forever to actually yield a bullish, I doubt theory bullish primary trend change, but it finally did. And in fact, looking at extremes, I went back and did this study but as I recall, I'm saying this from fuzzy memory, but it was either the first or the second. I think it was the second. It was the second intermediate term advance following a 4-year cycle low that historically every bullish primary trend change has occurred. But in 2016, it was well beyond that. Even that was stretched. And so, that kind of strung things along and left us in limbo land as far as what's happening. Well, then we get into the election, and, last year in 2017, after the election, we would see the DNA markers had tried to appear, and then they just couldn't, they couldn't hold. Nothing could solidify. But then, a month down the road or 2 months down the road, they'd try again, and then nothing could solidify, nothing could stick. And for whatever reason, I don't know. It's just the nature of the bubble, I guess, but nothing would stick. Well, then, in November of this last year, the market was literally on edge, and we had some of the markers marginally in place, but structurally it was in a position where it could get ugly. And it morphed away, and I said then we'd gone into, it's in print, and that we had gone into bubble mode, blow-off mode. Not bubble mode, we've been in bubble mode, blow-off mode. And that's where we are. And we're still there. And when looking at, some of the cycles work, there are extended cycles now of lesser degree. There's an annual cycle that is extended. There's an intermediate term cycle that is extended. We should be at those tops. We should have been at those tops, and they are pushed to the limit and extended. There is an intermediate degree top out here looming, but again, in spite of the fact, and I'm not talking out of both sides of my mouth, I'm trying to be perfectly clear here. Based on not just Hussman stuff, that's good stuff. To call him a fool is not wise. It is what it is. The valuation methods are solid. But I also have, like I said, statistical and technical readings now that show that this is the most extreme ever. Those are facts. And the other fact is, and like I've said before, there is no extreme like this in any market. And I've said this a dozen times, I'll say it again. I challenge anyone. You send me a chart, and you show me a bubble, a single bubble. I don't care if it's in sugar or soybeans or the tulip. Send me, I want to see one example where a bubble has survived. It hasn't. None of them do, and they all end the same. And the problem has been is that this thing has been pushed along and pushed along and pushed along with the liquidity, with the monetary policy, and it has pressed the envelope by every measure. And that's what these extreme measures are showing us with Hussman's models being pushed to the limit. And it's not just Hussman. I don't mean to patronize the guy. I don't even know him. Or my cyclical work and the statistics and so forth. I mean, by whatever measure is the point, really. That's the reason that everything has been pushed, is because of the size of the bubble and I think the liquidity campaign behind it. But in the end, what they have done, the point is with, all these extremes, what it's telling us is that, it is in fact the mother of all bubbles. But the technical work tells me that we're not done yet. It's not there yet. Any sort of top in here, I think, is going to be short-lived. Intermediate term, it could be swift. It could be like a little air pocket, perhaps even. But I don't think it's done yet. And I also maintain that once we will see it when it develops with the markers. I think they'll be clear, just like they have been throughout history. And then once it does set up and happens, then the other side of the equation is that it's going to be just as spectacular to the downside. I think it's going to literally rock the financial, political, social system. It's going to be equally as dramatic. All of them are. And I mean, when I say all of them, all bubbles, they end the same. And with this being the biggest of them all, then you naturally would expect, for the downside to be most dramatic as well. And that's where I stand. But right now, no, I don't think this equity thing is over. And without question, it is a bubble.
Tim, we have a lot of young traders who for the last 9 years have never seen a major downturn in the market, and many have the attitude the Fed has your back. They won't allow another market collapse to happen. Is that a bad attitude to have?
That is a foolish attitude to have. It is a naive attitude to have. And at present, that attitude, it prevails. But, that's very dangerous thinking. And, the people with that attitude, they're going to get their lesson. I had a similar experience online with a guy just in one of the social media platforms, made a comment about something, and he just, that cocky attitude. That's part of the deal. I think that is just a naivety, lack of I don't even know how to say it, lack of research, lack of knowledge for anyone to make such a comment like that. The Fed has created this bubble, and like I said, the ultimate fallout from it is going to be, I think, the worst financial crisis that this country and the globe has ever seen. So yeah, they got our back for now. They do. But it's not sustainable. These models are not wrong.
Well, what scares me is every time I hear the term, unemployment's down to record lows, things couldn't get better, that's when the bad things happen.
Well, that's true, but let me ask you this. I mean, some of these people, like you said, you could be, and I don't mean to sound like an old coot, because I'm not. I mean, I'm not that old, but I'm old enough to remember the 80s. I'm old enough to remember how things were during the tech bubble. I worked in the telecommunications industry. I remember how it was. I know how things were. I know what a real thriving economy looks like. I remember. I was there. And so for someone that's, and again, I don't mean for this to sound the wrong way, but for someone that's 30 years old, has been trading the market for 9 years, as you say in that example, and they want to tell you that the Fed's got you back and everything's great, they're full of crap. They're wrong. This economy is not what it was in a secular environment in the 80s and the 90s. Sorry.
We'll have more with Tim Cyclesman Wood right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going to happen with gold?
Well, the 9-year cycle in gold has been the great debate and sketchy. I still think at this time, because I don't have the cyclical data or the structural data to prove otherwise, I still maintain that we have the decline into the 9-year cycle low still ahead. As with equities, this cycle has stretched a little bit. It's typically averaged around 8 months, but it's also always had 9 of these little annual cycles embedded in it. We've talked about this before. And the problem with the 2015 low is that was only cycle number 7. I can't squeeze 8 out of it. I can't squeeze 9. I mean, it's 7. And so, anything's possible. I'm not going to say, given all the extremes that we've seen, you can't discount anything, but there's no precedence for that to have been a 9-year cycle low. So until we have hard evidence to prove otherwise, we have to assume that this cycle is stretched a little bit too. We're still in the 9th seasonal or annual cycle, and that low is still ahead. Now, with that said, the advance, which we knew was coming out of the December intermediate term cycle low, it has retested the September high, and here we sit. You know, that we said when the September high, you know, the advance into that high happened, that it was counter trend, and that lower prices were ahead, and they were. I mean, we went down, but now we've come back up again like a yo-yo, and we managed to extend and extend and extend, and now we've retested that high. And here's the telltale sign. When this intermediate term decline out of this intermediate term top that is pending, when it turns down, one or two things is going to happen. It's real simple. Either we go below the December low or we don't. If we do, then we're on track for the decline into the 9-year cycle low. We're good. If we don't, then okay, it's going to literally force a square peg in a round hole. The structure is going to mandate, because there's no argument left. It's going to force the 15 low to being the 9-year cycle low. And people say, you know, hey, that's great. I told you so. I knew it. This is no. That is the worst possible scenario for gold. And the reason being is, look at silver. I mean, silver, I'm not looking at the chart, but silver, as I recall, I'm saying this from fuzzy memory, the last annual, it made an annual cycle low in, I think it was in December of 16, and then that cycle peaked in February, I believe it was, of 17. We still haven't surpassed that high. If you look at the structure of so that's the left translated cycles, what I'm saying. Left translated cycles, they peak to the left of center and then they move lower. That's a bearish structure. It's a bearish indication. If you look at the structure of the XAU or the HUI, it's the same. So to have had a 9-year cycle low in gold and to have that negative structure with the HUI, XAU, and silver, that's not positive. That's pathetic. And so the most bullish thing that could happen for gold is for it to wash out into the 9-year cycle low ahead of us, and then give us the foundation that we need to launch a healthy, normal 9-year cycle advance. So, bottom line, this intermediate term cycle is going to tell us the tale on gold. And, you know, I don't really know. I can argue at this point both sides of the fence. I'm not sure how this is going to pan out. I mean, I'm a bit of a gold bug myself, and I hope that the 9-year cycle low is still ahead, because that way the statistics remain whole, the structure remains clean, and we got a great 9-year cycle advance ahead of us if that's the case. So that's what I hope for. And like I said, in the short run, you know, that's hoping for lower prices, and it is bearish for gold. But in the long run, that is the much more bullish scenario. So I hope that's the way that it pans out, but I don't know. We're going to see.
We'll have more with Tim Cycles Van Wood right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Tim Cycles Van Wood. Tim, the price of oil is still hanging around $65 a barrel for the best quality crude. That's unusual for this time of year. Is it going to hold out?
It has been unusual. It is been somewhat, this advance in crude oil has been against the grain, so to speak, because typically you see the lows this time of year. That said, all of the entire commodity complex has risen with gold, crude oil, gold, equities. It's all moved up here together. But how do I say this? Looking at the CRB index, there is a 3-year cycle, and I think that everything tells us that the CRB is moving into a 3-year cycle top. Everything tells me that, yes, this advanced just like gold. It's been stubborn. I mean, the structure's not the most positive thing in the world by no means, but it's held on, okay, and I just explained that, so I don't mean to rehash. But the same thing with gold, with crude oil. Yeah, it's lasted a little longer than expected. Yeah, it's run a little further than expected, but I still think it's counter trend, and that, that crude oil revisits the lows, in conjunction with the 3-year cycle low in, the CRB and the 9-year cycle low in gold. Absolutely. I think that the surprise is going to be, and I'm not saying we're there yet, I think it's in the making, and I think we see it this year. It's possible that it has occurred, but I don't have confirmation to say that, so I can't say. But it is in the making. I'm confident with that there is a 4-year cycle in the dollar that is due, and it may be that we need one more little intermediate term cycle to finish the building of the base in the low. But I think the surprise, or one of the surprises in 2018, is going to be a much more major low. People are talking about the dollar collapsing, and I'm not seeing that here. I'm not saying that can't happen, but here's how it would have to happen if it did. We have the 4-year cycle low coming, and then what we would have to see is that 4-year cycle advance begin to fail. And until we see that, then I can't say that the dollar is going to collapse or something crazy like that. I do see a 4-year cycle low in the dollar. Beyond that, I can't speculate about how the advance out of that 4-year cycle low is going to occur. Now, it may be that it fails, and that may be the catalyst that sends the 9-year cycle advance to the moon, if it's going to the moon, once we get this washout. I don't know. That's getting too far over the horizon. We have to get to the next low points before we can speculate, start connecting the dots with the ones that follow. So anyway, we have a 4-year low in the dollar coming. We have a 9-year low, I think, in gold coming.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.